Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Loews Corporation Annual Report. Loews Corporation offers a diverse range of businesses and services through its subsidiaries. The company's primary focus is on providing commercial property and casualty insurance to various clients across the United States and internationally. This includes specialty insurance products such as management and professional liability, surety and fidelity bonds, and risk management services for professionals like architects, real estate agents, and law firms. In addition to insurance, Loews Corporation also provides a range of other services, including transportation and storage of natural gas and liquids, ethane supply and transportation services, and hotel operations with 25 hotels across the country. The company's manufacturing arm produces plastic containers and resins for industrial customers. Furthermore, it offers warranty and alternative risk insurance products, as well as long-term care insurance solutions. Loews Corporation also serves the healthcare industry by providing professional and general liability insurance to medical practitioners, allied facilities, and aging services. Its insurance products are marketed through independent agents, brokers, and managing general underwriters. With a presence in multiple industries, Loews Corporation has established itself as a comprehensive provider of commercial property and casualty insurance and related services. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what could cause Loews Corp's stock price to increase in the past year. Loews Corp is a multinational conglomerate with diverse interests in insurance, energy, and hospitality. The company's stock price has likely increased due to several factors. One reason is the strong performance of its subsidiaries, particularly CNA Financial Corporation, which has seen significant growth in its insurance business. This growth has contributed to Loews' overall revenue and profitability. Another factor that could have driven up Loews Corp's stock price is the improvement in the energy sector, where the company has a significant presence through its subsidiary, Diamond Offshore Drilling Inc. The recent increase in oil prices has boosted the demand for drilling services, leading to higher earnings for Diamond Offshore. Additionally, Loews' strategic investments and cost-cutting measures have likely contributed to its improved financial performance. The company's efforts to streamline operations and reduce expenses have helped maintain profitability even during challenging market conditions. Lastly, the overall economic recovery in the United States has also had a positive impact on Loews Corp's stock price. As the economy continues to grow, companies like Loews, with their diversified portfolios, are well-positioned to benefit from increased consumer spending and business investment. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a given company can be attributed to several key factors. On one hand, an increase in insurance reserves, higher property and casualty underwriting income, net investment income, and non-insurance warranty revenue are significant contributors to revenue growth. Additionally, specialty, commercial, and international segments have shown substantial increases in revenue, with the specialty segment experiencing a notable jump of $197 million. Furthermore, other revenue streams such as higher average daily rates, food and beverage revenues, equity income from joint ventures, and firm and interruptible transportation services have also contributed to revenue growth. The company's ability to generate net income and operating cash flow has also been a significant driver of revenue growth, with an increase of $278 million in net income and $254 million in operating activities. On the other hand, revenue decline drivers include a decrease in deferred revenue balance due to recognized revenue from prior periods outpacing new growth in non-insurance warranty business. Amortization expense of $1.2 billion has also been reported as non-insurance warranty expense on the consolidated statement of operations. Possible refunds to customers due to regulatory proceedings have also contributed to revenue decline. In summary, revenue growth is driven by a combination of factors including insurance reserves, property and casualty underwriting income, net investment income, non-insurance warranty revenue, specialty, commercial, and international segments, as well as other revenue streams such as higher average daily rates and equity income from joint ventures. Revenue decline drivers include decrease in deferred revenue balance, amortization expense, and possible refunds to customers due to regulatory proceedings. The company has demonstrated a consistent ability to generate positive operating cash flow over the past few years. According to financial reports, in 2025, the company's operating cash flow reached a significant milestone of $3,279 million. This impressive figure is further supported by other pages in the report, which confirm that the company generated substantial amounts of operating cash flow in subsequent periods, including $1,341 million and $1,292 million. These numbers clearly indicate that the company has a strong financial foundation, enabling it to maintain a positive operating cash flow. The company's debt level has undergone significant changes over the years. Initially, long-term debt decreased from $8,939 million to $8,437 million, while short-term debt increased from $5 million to $1,052 million. However, this trend was reversed in subsequent periods, with total long-term debt increasing by 12% due to new issuances and refinancing. On the other hand, short-term debt decreased by 52%. Long-term debt also experienced a decrease of $499 million at one point. In terms of interest expenses, there is conflicting information between pages 61 and 62, with one stating a decrease and the other an increase in interest expenses. However, it is clear that cash payments for interest on long-term debt increased from $385 million to $421 million over 2 years. Interest expenses remain the same at $75 million for both 2024 and 2025, according to page 184. Management's outlook for Boardwalk Pipelines is positive, with expectations of significant capital expenditures in 2026. The company's existing resources are deemed adequate to meet its obligations over the next year, as reflected by stable ratings from AM Best in S&P. A total return approach is employed to maximize long-term returns while managing risk. This strategy involves investing a portion of plan assets in equity securities and limited partnerships, with a target allocation of 0–40%. The company's focus on growth and risk management suggests a commitment to prudent financial planning. Overall, the management's outlook is optimistic, with a focus on investing for long-term returns while minimizing risk. This approach is expected to drive the company's future prospects and ensure its continued stability. CNA has made several significant acquisitions and divestitures over the years. In terms of acquisitions, one notable example is the 2018 purchase of Boardwalk Pipelines limited partnership units not already owned by affiliates. On the other hand, CNA has engaged in various divestitures to manage its liabilities and optimize its portfolio. One major transaction was the redemption of $500 million of its 4.5% senior notes on March 1, 2026. Additionally, Boardwalk Pipelines completed a public offering of $550 million aggregate principal amount of its 5.4% senior notes due February 15, 2036 to redeem outstanding debt. CNA has also ceded certain liabilities to other companies, including National Indemnity Company, NICO, in 2010, and Cavalo Bay Reinsurance Limited in 2021. Furthermore, the company sold $1 billion of its defined benefit pension obligations to Metropolitan Life Insurance Company through a non-participating single premium group annuity contract in 2024. In terms of specific assets, CNA has divested its legacy A and EP liabilities, certain legacy mass tort reserves, and its long-term care business that is in runoff. These transactions demonstrate the company's efforts to manage its risks and optimize its portfolio through strategic acquisitions and divestitures. The company's financial activities have been focused on returning value to its shareholders through two primary means: buying back shares and paying dividends. In terms of share buybacks, the company made a significant purchase in Q4 2025, acquiring 289,911 shares of its common stock. In addition to buying back shares, the company has also paid out cash dividends to its shareholders. The dividend payments have been consistent over the years, with $0.25 per share being paid for each year from 2023 to 2025. Furthermore, in a special move, the company paid an additional $2 per share as a special cash dividend. Overall, it is clear that the company has made a concerted effort to reward its shareholders through both share buybacks and dividend payments. There are concerns about inventory buildup or supply chain disruption that could potentially impact businesses. Loews Hotels and Co.'s operations are at risk due to supply chain disruptions, which can be caused by various factors such as pandemics, weather delays, and natural disasters. Additionally, fluctuations in raw material prices and availability may affect companies like Altium Packaging, limiting their ability to procure primary materials and impacting sales volume and financial results. These disruptions can have a significant impact on businesses, making it essential for them to be prepared and adaptable to mitigate these risks. That concludes the financial summary for Loews Corporation. Feel free to comment below, and I will be happy to answer them when possible.